If you are 60 years of age or older, what I am about to share with you might be the most important minute you spend online this week. 5 bills are showing up right now in July, and missing even one of them can drain your savings, raise your premiums, force you to lose benefits you have earned over a lifetime, or trigger penalties that never go away. These are not theories. These are real, dated, money out of your pocket bills tied to your Medicare, your Social Security, your home, your air conditioner, and your tax filing. Stick with me to the end because the 5th bill is the one most retirees never see coming until the IRS notice arrives in the mail, and I will show you exactly how to protect yourself before the deadline hits. I have laid out each payment in plain language with simple dollar amounts and clear dates so you can check your own situation one line at a time. And please, when you find this useful, tap the like button, hit subscribe, and leave a comment with the bill that surprised you the most. Your story might save someone else in your family from a costly mistake this month. Let's start with the bill that shows up first and hurts the most: Medicare Part B. For most people 65 and older, Medicare Part B covers doctor visits, outpatient care, lab tests, and many preventive services. The premium is not free. According to the Centers for Medicare and Medicaid Services, the standard monthly Part B premium for 2025 is $185, up from $174.70 last year. That is more than $2,000 a year, taken out of your pocket whether you visit a doctor or not. If your Social Security check arrives on the 2nd, 3rd, or 4th Wednesday of the month, your Medicare premium is usually deducted automatically from that deposit. That schedule is set by the Social Security Administration, and it runs like clockwork all year. Birthdays from the 1st through the 10th land on the 2nd Wednesday, birthdays from the 11th through the 20th land on the 3rd Wednesday, and birthdays from the 21st through the 31st land on the 4th Wednesday. That automatic deduction is a relief for many households because the money never has to leave your hands. The danger sits with the roughly 1 in 4 beneficiaries who pay Medicare directly by bill instead of through Social Security, often because they have not yet started collecting retirement benefits, because they live abroad part of the year, or because their premium was recently adjusted. If you are one of them, look at your mailbox right now. A July bill from Medicare, mailed through the Centers for Medicare and Medicaid Services, or processed through your bank, is normally due around the 27th of the month. Miss it, and you can be dropped from coverage or hit with a late penalty that grows the longer you wait. Now here is the part that nobody tells you in the brochure. Higher income retirees pay a surcharge called IRMAA, which stands for Income-Related Monthly Adjustment Amount. For 2025, if your modified adjusted gross income from 2 years ago is above $106,000 for a single filer or above $212,000 for a married couple, you pay more on top of the base premium. The surcharges start small and climb in tiered brackets, with the highest income retirees paying more than $500 a month for Part B alone, plus extra on Part D prescription coverage. That is real money. The danger for July is this: if your 2-year-old income dropped because you retired, lost a pension, sold a business, or experienced the death of a spouse, you have the right to file a life-changing event form with Social Security called Form SSA 44 and ask the agency to recalculate your premium using your more recent, lower income. Many people qualify but never file. That is a refund they will never see. If any part of this sounds like it might apply to you, call your local SHIP office. SHIP stands for State Health Insurance Assistance Program, and it offers free, unbiased Medicare counseling in every state through the Administration for Community Living. Real human counselors will sit with you, look at your premium, and tell you if you are overpaying. The National Directory for SHIP is on the official site shiphelp.org. If this content is already clicking for you, please click the like button below. It only takes a second, and subscribe so you do not miss the next Senior Money Alert. Now, before you move on, the second July bill is one that most people never think of as a bill, but missing it can quietly cost you thousands of dollars in lost retirement income. That second bill is federal income tax withholding on your July Social Security check. Stop me if you have heard this before. Almost half of retirees who receive Social Security do not realize that up to 85% of their benefit can be taxed by the federal government, depending on something called combined income, which adds half of your Social Security, your other retirement income, tax-exempt interest, and a few other items together. The IRS publishes a worksheet every year in the instructions to Form 1040 to help you calculate it. The common mistake is to assume that the July payment is yours in full. It is not. Your withholding amount, if you ask Social Security to withhold federal taxes from your check, comes out automatically and shows up on the same deposit screen. If you did not set up voluntary withholding, you are still responsible for sending quarterly estimated taxes to the IRS on your own. The second quarter installment for the 2025 tax year was due by June 15th, which falls just before July. If you missed the June payment, you can still reduce the damage by sending it now, combined with a clear note that it is for the missed quarter, because the IRS treats late estimated tax payments more kindly than late annual tax filings, but interest still accrues from the original due date. The real punishment arrives in April when you file your return and discover that the IRS safe harbor rule was not met. The safe harbor simply says that through withholding and quarterly estimated payments combined, you should have paid at least 90% of this year's tax, or 100% of last year's tax, or 110% of last year's tax if your adjusted gross income was above $150,000. Miss the safe harbor, and the IRS charges you an underpayment penalty on top of the tax you already owe, calculated quarter by quarter. So in plain English for July, review your July Social Security statement, see how much was withheld, look at your pension and any interest and dividends, and decide whether a quarterly estimated tax payment makes sense for you right now. Use IRS Form 1040-ES to calculate the right amount. The third July bill is the one tied to the roof over your head, and it is the bill I most often see catch retirees off guard. Property taxes in dozens of American states run on a semi-annual schedule that lines up almost perfectly with July. In Maryland, the state comptroller's office confirms that the first semi-annual real property tax installment is due July 1st and can be paid without penalty through September 30th. California's secured roll second installment runs in different months depending on the county, but payment patterns across the country share one common danger. Missing a property tax payment can begin a chain that ends in a tax lien against your home before any money is even paid to a lender. For a 60-year-old homeowner on a fixed income, that chain is terrifying and absolutely avoidable. Here is the part that matters most to the viewers of this channel. Many states offer a senior property tax credit or a senior freeze that limits or eliminates the yearly increase in your tax bill. Cook County in Illinois runs a senior exemption worth thousands of dollars a year for households that qualify. Indiana has an over 65 property tax credit that lowers the net bill directly, with an application deadline of January 15th for taxes first due the following year. New Jersey offers a property tax freeze alongside a senior tax deferral program for seniors who meet income limits, with the most recent filing windows tied to the spring before the July bill arrives. Most of these programs require an annual application, and the deadlines are often in the spring. If you missed this year's deadline, mark your calendar for January 15th or whatever your state requires, and put a phone reminder on your calendar today. The July bill itself is non-negotiable, but the savings from a senior exemption can cut hundreds of dollars from next year's same bill if you apply on time. If this video is helping you keep more of your retirement, please share it with a friend who is 60 or older. They will thank you for it, and so will their family. Now, here is a hidden detail I want you to hear before we move to the next bill. Even with a senior freeze in place, your mortgage servicer may still expect an escrow payment that is set above what you actually owe the county. Escrow accounts routinely pad for taxes and insurance, and the cushion money sits in your loan until the servicer pays the bill on your behalf. If you have a senior exemption on file and your servicer never adjusted the escrow estimate, you may be paying in hundreds more than you should. You can request an escrow analysis from your servicer, usually in writing, and ask for a refund of the excess. People who do this routinely receive checks, sometimes for more than $1,000. I encourage you to look at your most recent escrow statement before you pay the July property tax bill. If an exemption is in place and the servicer has not yet adjusted, you have options. Please keep watching, because the fourth bill is the one that surprises retirees every single July, and it has nothing to do with Washington at all. The fourth July bill is the summer cooling and electricity surge. The National Energy Assistance Directors Association recently projected that the average U.S. household will spend close to $800 on electricity this summer as temperatures climb and power prices rise by more than 10% over last year. For a retiree on a fixed income who lives in the South, the Southwest, or anywhere the thermometer hits 90 or above for weeks on end, this number is conservative. Many seniors I speak with report bills between $300 and $600 in a single July month, double or triple what they paid in May. If your air conditioner runs around the clock to manage heart conditions, breathing problems, or recovery from surgery, you are paying for it now, and the meter is still spinning. The cruel part is that help exists, but it is hidden in plain sight. The Low-Income Home Energy Assistance Program, known as LIHEAP, is a federally funded block grant that every state administers through the Administration for Children and Families, and many states open a summer cooling component specifically because the bills land in July. The heating and crisis component of the program runs seasonally and can extend through late July in some states. New York's heat cooling assistance benefit operates on its own deadline. Ohio runs a summer crisis program with state funds layered on top of the federal grant. Arkansas has announced that community action agencies begin accepting cooling applications in late July. The amounts vary, but a single grant can cover a portion of your July bill, pay for a window air conditioner, or fund a fan and minor repairs for a medically vulnerable household member. You apply through your state's LIHEAP office, and the application is usually short. You provide proof of income, a recent utility bill, and identification. If you have never applied, this is the year to try, because summer bills keep climbing and the funding is finite. Once the cooling money is gone in your state, it is gone until next summer. While you are looking at that July utility bill, also ask your provider about budget billing, which averages your annual cost into 12 equal payments, and about the medical baseline allowance available in California and several other states, available to households where a licensed physician has confirmed in writing that full-time air conditioning is medically necessary for someone in the home. These two programs alone can shave hundreds of dollars from your summer bill and convert a frightening spike into a predictable monthly amount. If you have stayed with me this far, drop me a quick comment with the words "checked bills" so I know this video is reaching the people who needed it most. Now let's move into the fifth bill, the one I almost called a tax trap because it catches so many new retirees who never had to think about quarterly estimated taxes when they were employees. The fifth July bill is the quarterly estimated tax payment, and it ties directly to everything we have already discussed. If you retired 2 or 3 years ago and you have a pension, a small business, rental property, an IRA you are drawing from, a 401k you rolled over, brokerage dividends, or any meaningful interest, the IRS expects you to pay tax on that income 4 times a year, not once in April. The system that worked when your employer withheld everything from your paycheck no longer works in retirement. The required payment dates come straight from the IRS instruction book for Form 104-0-ES. The first installment was due April 15th, the second was due June 15th, the third is due September 15th, and the fourth is due January 15th of the following year. By the time you watch this in July, you may have just missed the June payment. Don't panic. The fix is simple. Open IRS Form 104-0-ES, calculate what you owe for the missed quarter, and send the payment with a clear note that it is for the second quarter of 2025. Then immediately set up the September installment using the same form. The penalty for underpayment is not catastrophic if you act quickly. The catastrophic outcome is ignoring it until April of next year, when you file your return and discover a penalty that adds up based on the days you were late, plus interest on top of the interest. The IRS publishes the underpayment interest rate every quarter on its official site, and it tends to run in the high single digits in recent periods, which means every month of delay costs real money. Now here is how this connects to other money decisions many retirees make in July. Required minimum distributions, often shortened to RMDs, are mandatory annual withdrawals from traditional IRAs and most 401k accounts once you reach the age set by federal law. For people who reached age 73 in 2024 or earlier, RMDs have already begun, and the IRS requires that the annual withdrawal be distributed by December 31st each year, with a possible delay of the first ever RMD until April 1st of the year after you turn 73. Most retirees take their distribution in a single December withdrawal because market conditions felt risky earlier in the year. That single December decision creates a large tax bill that lands the following April. And the only way to avoid an underpayment penalty is to send quarterly estimates that reflect that big withdrawal before the end of the year. So if you have an RMD coming in late 2025, sit down in July, project the size of the withdrawal, calculate the federal tax on it at your bracket using the IRS tax withholding estimator, divide it into the remaining quarterly installments due in June and September, and send the right amount to the IRS through Form 104-0-ES. This simple step is what separates retirees who sleep well from retirees who get a $1,400 penalty letter in 18 months. If this feels confusing, a certified public accountant, an enrolled agent, or a fee-only financial planner can do the calculation in under an hour. Many offer a free first call. If this video is the reason you set that appointment, tap the like button and share it with a fellow retiree who is about to reach RMD age. Let's wrap up the most important pieces in one final pass, because you came here for clarity, and that is what you should leave with. The first July bill comes from Medicare Part B at $185 a month for most people in 2025, higher if your income triggers an income-related monthly adjustment amount above $106,000 for a single filer, with the right to ask Social Security to recalculate after a life-changing event using Form SSA 44. The second bill is Social Security withholding, because up to 85% of your benefit can be taxable, and the IRS safe harbor expects you to pay either 90% of this year's tax or 100% of last year's tax, or 110% of last year's tax, if your adjusted gross income was above $150,000, all through withholding and quarterly estimates combined. The third bill is the property tax installment tied to July 1st in many states, where a missed payment can become a lien, and where a senior exemption or freeze can reduce next year's bill if you apply before your state's filing window closes. The fourth bill is the summer cooling cost climbing more than 10% this year, with LIHEAP cooling assistance, budget billing, and medical baseline allowance as the three federal and state tools that lower the cost. The fifth and final bill is quarterly estimated taxes through Form 1040-ES, with the second quarter payment due June 15th that just passed, and the third quarter due September 15th, a deadline that matters most for retirees planning a year-end required minimum distribution from a traditional IRA or 401k account. If you watch only 1 minute of this entire video, watch this one. Triple check the deduction from your July Social Security deposit. Make sure the amount that leaves your account matches the Medicare premium you actually owe for 2025, not a stale number from a year ago. Call your SHIP counselor through shiphelp.org to confirm your income-related monthly adjustment amount tier, and if your income dropped recently, file the Life-Changing Event Form SSA 44. Pull up your most recent property tax bill and ask your county assessor's office in plain English whether you are receiving every senior credit for which you qualify. Call your electric company, ask about budget billing, and apply for LIHEAP cooling assistance before the funds run out in your state. Finally, open Form 1040-ES tonight, calculate one realistic quarterly tax payment, and either send it now or set the September reminder on your phone. Each of these steps takes less than 30 minutes. Each of them can save you hundreds of dollars, and together they protect the retirement you spent a lifetime building. I want to close with this. The reason I recorded this video is not to scare you. It is to give you back the feeling that your money is under your control. The senior years were supposed to be a reward, and they still are, but only if the bills you owe are clear, the bills you can reduce are reduced, and the deadlines you cannot move are respected. You do not need to be a financial expert. You only need to be a person willing to spend one Saturday morning with a stack of statements and a phone. Please share this video with a parent, a sibling, a neighbor, or a friend who is 60 or older, because many of them will never search for information like this, and they deserve to know before they pay. Like this video, subscribe for the next Senior Money update, and leave me a comment with the bill number that surprised you the most. I'll see you on the next one.